I'm Ira Epstein. Welcome, and this is your financial market wrap-up, and this wrap-up is for the evening as we're here now on Tuesday, the 20th of August, 2024, and we're getting on to 6:20 p.m. Central Time. You know, I live right where the Democratic National Convention is being held. No, not in the United Center, but right by it. And in this area, I was watching last night the bulletproof cars parked in front of my house. You can just see them. Black and government, you just see exactly what they are. Why? Well, you had President Biden there. You had Hillary Clinton. You had Kamala Harris show up for the convention. She won't be there tonight, but tonight I'm watching all the dignitaries walk by, and it's strange because they're in their sport coats and the ladies are dressed. Tonight, Michelle Obama and President Obama will be speaking at the DNC. But I want to congratulate the protesters and the Chicago police. I live here. I don't care what the press says. I'm telling you, this thing is much better handled than people are giving Chicago credit for. Last night, there were a total of 14 people arrested. A couple of people wanted to stay in jail. That's their goal at this. But most people got out on their own recognizance. And of course, you get the jerks to throw signs at the police and spit at them and all that. They're going to get themselves in trouble if they want it. But the police have been, and I want to give them some credit here, unbelievable, and I do feel safe. I had friends that left town because this was happening, and I think they made a mistake so far. It's not over until it's over. You can see the stock market's mixed. Why? Well, before I start talking, maybe we should take a look at something pretty important. And no, it's not going to be the mortgage numbers that we get at 6 a.m. This is what I want you to focus on to start with. You get the advanced quarterly services. Now, I had to look into what this really means. You get reports that come out after a quarter, 55 to 75 days later, depending on the report and the time of the year. And it revises the payroll numbers. Remember what I just said, payroll. Now, you get one big revisionment now, and then we'll get an end-of-the-year revisionment in February, but this is a big revisionment. I'm hearing already, Goldman and other firms are saying that the jobs numbers over the past year to date could be overstated by as much as 1 million jobs. What? So that would mean instead of, let's say, an average that we've got of 240,000 jobs a month that we've been getting, that's about an average, it'll be closer to maybe 150,000. What does that do? Does that tell the Fed the jobs market is weaker than they thought? The Fed knows about this coming out. They're aware of the report, but I'm telling you, it could have a bigger consequence than people think. And does it mean unemployment is wrong? Number two, how this report comes about is the market goes to the state payrolls. And that's more accurate than these other ways that they do it at this time, and that's how they come with the revision. But what do they do with the unauthorized migrants? That will be another part, because on one hand, they're working, all right? But they're not authorized. They're under the table, whatever you want to call it. There's plenty of them here. I live in a migrant city. Come on. Any of the sanctuary cities are those type of cities. And while big companies won't hire these people, they're there everywhere. Drive outside of right now of a Home Depot. You will see a contingent of people from South America or Mexico, and they're there and they want to be hired, and people pick them up in the vans, they take them, they're getting paid in cash. You know, this is how it's working. And I'm saying this going on in all kinds of things. We then get the FOMC minutes. You know that's going to be looked at because people want to see how unanimous or were there dissensions. Where were they on the votes that were coming in for the last move, and how close are they getting with people calling for a bigger rate cut? We'll see that. And then we get the petroleum stocks at 9:30 in the morning. I think tomorrow's an important day, and I think people aren't ready that 9 o'clock report can be something of a surprise. Energy's down. There's still shuttling going on in the Middle East, and as usual, Hamas said, this is not the deal. This is what I expected to be. That they agreed to. Israel will say, well, this is the deal they thought it was, and I'm not convinced we're anywhere on this deal. I want to wake up surprised. So I can't wait till we wake up and there is a deal, Be it 6 weeks, whatever, it'd be the beginning of something. So I think everybody wants to see that. As you take a look at what's going on in the metals, well, they're still holding on pretty good. The dollar keeps getting beaten up. It could be going back to parity. I mentioned that to you just the other day. Bonds and notes, we are what? Under 383 in the 10-year. What happens tomorrow if we get a surprise that the jobs market's much weaker than the market's been thinking? That should be interesting too. When we come and we take a look at the weekly close of the S&P, you're not quite at a new high. It'll be interesting to see if the report tomorrow has an impact, negative or positive. And then after that, remember, we have Jackson Hole taking place on Friday through the weekend. It's going to be an exciting week. This is unbelievable. You know, I keep reading about people writing about this, how the market crashed. And the big crash was right here. 3 days of absolute havoc as the market went down, and the carry trade that took place via Japan is their currency, and they began raising rates and cutting back securities they're buying, the unwind of that, and the vicious snapback in the market like it never occurred. This is unusual. Unusual is not even the right adjective for what it is. Look at how the market ran. So today, you wake up in the morning, and if you're watching CNBC and or Bloomberg, first thing you kept hearing was, is today going to be a record setter? 9 days in a row for the S&P closing higher, making higher highs, closing higher. It didn't happen. You closed a little bit lower, but you didn't give up much. Still a sign of strength. As you can see, the market's over the 18-day average here, the 100-day, the 200, but where's the resistance? Keep your eye on Bollinger Bands. I cannot begin to tell you how important they are in markets like this. The market hasn't been able to get back up to it. If it slips, the support's back into this whole area, and you're trying to embed. Now, trying is not embedding. You need both numbers to stay over 80, at least 3 days in a row to embed. I teach it in my charting course, and the importance of what it means and how it alters the structure of a market. Think of when you embed as like a turbocharger. It sucks in air, air being people with money. They come in, and if it's a bullish embedded reading, they're buying, buying, buying until you get to an altitude where the air thins out and the supercharger or the turbo is not working the way that it did, and the horsepower falls back. Well, that's pretty much what this is. Now, we have day one of embedding here. Let's see if I can come back. Yeah, day one, you can't count Wednesday. So day one is Tuesday's close. Day two didn't take place. You're just overbought. So that tells me that, yeah, if you get there, pretty good resistance at that number at this point. NASDAQ, same thing. Yep, not embedded yet. Not embedded in the Dow. And I'm not sure that you can get up there 1, 2, 3. Anything's possible. But what would the market react like if they said that the jobs market were 1 million people less tomorrow than the market thought? I don't know what the reaction would be, but I want to prepare you for that. When you look at the Russell just doesn't have the verve that the other markets do, and I've said this over and over. I realize that we all want to see in a true bull market the spread out. In other words, people not just buying a handful of those big tech stocks. They want to see spreading into this. Is the timing right in the month of August is the problem that I'm having, and I don't think it is, but we'll see if I'm right or wrong. So let's go back over here and get now to the 10-year note. Trend back to the upside. So we had a correction. We had lower highs. We were having lower lows for a moment all over the 18-day average. Often that culminates with the market trying to get back to the 18-day average. We're pretty close. You can still do it tomorrow. But you cannot enter a bear trend tomorrow. Why? Because you've now got this higher high like that, then even if you fell through all this, the support of the 18-day average, down here you'd have a higher high and lower low. It would not be a trend. 5-year notes, the same thing. And notice how it did go right to that 18-day average. Momentum's still pointing down. Markets are going to react tomorrow to that 9 o'clock report, I think. Dollar, really falling. This is a 7-month low, so we just keep dropping away in the dollar at this point as other currencies are going up. I remember back in May or so, you and I were talking, and I said, is the dollar going to rally or not on that first rate cut? We're going to be late to the party. Others most likely back then, and others being other central banks, will have begun their cutting process. And I said, one school of thought will be the dollar has to catch up, so it's going to go down as they go up because they're later in the cycle and their economies will respond quicker to the rate cuts. Seems to be what the market's thinking too. You see that when you look at the euro currency with an embedded reading. British pound overbought into the Bollinger Band. I cannot explain enough. You want to learn how to use the Bollinger Band at these numbers. Bitcoin, a bear market rally that so far has culminated again like it did here in hitting the 18-day average of closes, and so far hasn't been able to stay over it. You need to get up and stay over it to get bullish, and it's so far been unable to do that. On the energy markets, well, we know world economies are slowing. I write tonight in my full research report about how much less oil from Russia China has taken in the month of July. And actually, they picked up a little bit more from Saudi Arabia in terms of percentages than they had been. But it's an important part to it because we've got a slowdown that's been taking place. And you're seeing this on the energy prices. Another good thing. Any way you want to cut it, while the Fed always looks at a core to do away with if you will, the seasonality impacts of energy and food on the markets, you and I are paying for that energy and food. This is a tax that's come off us as the prices keep coming down, and you see that in your gasoline prices. I know you have to. I do, at least. And I drive a little car in the city, a really little car in the city, because there's nowhere to go. What am I going to do? Park up like a big shot and give it to a valet who scratches it? So we don't do that. Higher high, lower low, coming down through here. And last in the nat gas, you have a higher high. You're caught in a trading range here. Of the 18-day average to the Bollinger Band, and you're overbought. Learn how to play with that and work with it. I keep telling you about these bands. I want you to learn them. You can move your cursor at any time up to the top here. You'll be able to go to our enhanced Bollinger Band course. And if you watch this coming up right now, maybe you learn a thing or two. I'm Ira. You have yourself a great day. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.